Hi there, I'm Mike Larson, and I'm coming to you from the MoneyShow Philadelphia. And I'm here with Rick Bensignor, president of In the Know Trader. Rick, can you tell our viewers a little bit about what it is that your firm does and what it is that you do, and maybe let them know, kind of how you came about presenting?
Sure. So, In the Know Trader is the retail newsletter that I started about a year and a half ago. I've spent my career working with institutional clients, and about a year and a half ago I decided, you know what, retail has the right to be able to see the same type models that institutions use that they would not ever have access to. So I started this newsletter using specific models that are institutional models in order to give access to the retail side of the marketplace in order to really see how how institutions trade the market, because it's really very different than the way retail trades the markets and the models they use. And look, if RSI gets oversold, institutions aren't buying because RSI is oversold. You know, they use much more sophisticated models, and that's what I bring to them each week in the newsletter.
Okay. Now, as I understand it, you do a lot of work on behavioral finance. What exactly does that entail, and how do you use that in terms of what you're advising retail customers to do?
So behavioral finance is one of the hottest topics on the street. In the last 20 years, you've had 3 or 4 Nobel Prize winners in this area of combining kind of behavioral or psychological research along with economics. And behavioral finance is a much more finely tuned area of the general scope of behavioral economics, which really has to do with the psychology of how people make financial decisions and all the mess ups they make because of cognitive and emotional biases that as humans we all have and really can't control a heck of a lot. So the more you're aware of these situations and biases that you have, the more you have a better chance of not making some of these errors that we often do in making financial decisions. And as many people know and are learning more and more, human beings are very irrational creatures, and standard classic economic models don't suggest that at all. They figure that we gather data, we collect it, we sift through the data, and we're always going to make rational, sound decisions. The reality is human beings often make very unsound, irrational decisions, and this is the study of why we make those irrational decisions. And what I do is try to exploit those and find the times in the marketplace that we can take advantage of all the mistakes that portfolio managers make, because at the bottom line, they're humans and they make the same mistakes all of us do.
Sure, we'd love to think it's all about earnings and interest rates and everything, but sentiment plays a huge role.
Yeah.
What would you say if you had to look at the market right now? What is your work telling you in terms of the environment? Bullish, bearish, something in between? What could you say for viewers there?
So I think the market is still generally bullish. The fact that we're only 2% from all-time high in the S&P, given all the unknown news with a China trade deal or not, a president getting impeached or not, the Fed going to raise rates or cut back rates. There's so much out there right now that is very different than the norm. Most people usually have a sense of underlying stability and what's going on in the market. We never know what's going to happen the next day, but there's no shortness about that. But we generally have a sense of how things are as an underlying factor. And right now, we actually have very little sense at all. Mm-hmm. But as long as the market is this close to all-time highs, you can't argue and say we're in a bear market or anything like that. And I'm talking about the S&P. Obviously, small caps are not near their all-time highs. But what we're telling clients is kind of hang in there, and if we push to new highs and we need to exceed them by about another % or so, but if we get above 3,064 in the S&P, then the next targets are about 3,120, another 2-3% higher, and we'll keep playing the bull side as long as, I'll tell you what, we've told clients that we do have a line in the sand.
Okay.
And right now, that line in the sand is between 29.11 in the S&P and 28.78.
Okay.
If those levels get broken properly, it's not just the price, it's how you break them, then we're out. Otherwise, so we're willing to give back 3 or 4% from current levels to stay in this bull that keeps going and fooling people that it's going to end, and at some point it will.
Sure.
But right now, we're willing to kind of hang with it.
Okay. Well, given that there's obviously an evolving market and sentiment's going to play such a role going forward, where is it that people can go to, is there a website or something you can refer them to where they can find out more about what it is you do and maybe get some advice?
Sure. So my retail newsletter is at inthenotrader.com, and we have lots of videos, there's tutorials, there's interviews I've had on TV, lots of things to look at, and of course information about our newsletter each week and how to subscribe. So it's www.inthenotrader.com.
Great, so that's In the Know Trader. Rick, thank you very much for your time.
Mike, thank you.
Thank you, everyone.